In this video, traders, we're going to answer the question from a subscriber, which is a great question. Where do sellers magically come from at resistance? I like this kind of stuff because it's thinking about price structure, price action, and thinking a little bit further ahead than just drawing a line on a chart. Let's investigate now. Hey guys, very warm welcome to you. Thank you for joining me. So this is a good question. Where do sellers magically come from at resistance? So magically, obviously, a little bit of tongue in cheek and a bit of fun around it. But the idea is why are sellers there at resistance? What's the whole point of it? How does resistance work? And why do we have these sellers at resistance? So let's explore that now, because it's a great question. I love this kind of stuff because it's about price structure. It's about thinking about who's the other side of the trade, who's the other side of the deal. How can you get the better of that person? All this, it's really good thinking about stuff. Okay, so imagine we've got a resistance level there. Imagine it's from way ago. Not going to talk about how we draw support and resistance lines. You know this, I know this. It's a simple process. If you're brand new, you stumbled across this, go and check out some of the videos in the library. We talk about how you draw support zones, resistance zones, etc. Or the way that I like to do it. Everyone's got their own different flavor. Anyway, imagine now you've got this resistance. Why do sellers magically appear, or where do they come from at resistance? So the point of resistance, guys, obviously just flip this on its head for support, is that it's a level where the supply and demand has shifted back. So you've got this kind of balance, if you like, beam, and really you get a lot of buyers coming in, so you get a lot of demand coming in, and then you get a lot of supply coming in the other way. So as we're pushing up to the resistance, what's happening? Well, there's two things that can happen for price to reverse. One is that the supply overcomes the demand in terms the demand remains static. Imagine you had 100 buyers all buying one contract each. You had 101 sellers. Then obviously that's going to make the price go lower, especially if they're prepared to pay a lower and lower price. Be careful of the fact that every buyer is a seller and not necessarily more buyers than sellers that moves the price. So that's going to affect it. Similarly, if we had the buyers, 100 buyers, 50 sellers, but then let's say 60 of the buyers backed off, you're going to see selling. So you've got two ways that price can kind of move. One is that the buyers shut off. Of course, bear in mind, guys, you've always got buyers and sellers interacting. If buyers think, hey, this is too high, I'm not prepared to pay any higher for whatever reason. That could be as part of a portfolio. They don't want to pay more than this for it. They don't think it's worth more than this for it. Their client that's called them has said, hey, I don't want to pay more than this for it. Maybe it's a company hedging if it's kind of corn or it's some other contract or currencies. Some reason the buyer doesn't want it. We don't know that reason, but there could be some reason. Similarly, there could be a reason why a seller perceives that as a good place to initiate their selling program, or maybe they're not initiating a selling program. Maybe it's just a big block sitting there, reloading. It might not be visible on the order book. It might be someone reloading, and someone said, hey, I want to sell 300,000 shares at $50. If we assume this is a stock, fine. They might put in 1,000 shares at a time, and because there's not that many buyers, it goes up to it. Then of course it hits that magical seller level. For whatever reason, they've decided that's their level. And again, that could have been from further back. They could have been waiting for days for that. It could have kind of been a resistance before, come lower, now come back up. The selling could be profit taking, any reason. And the reason that that's stopping there is just purely because at that point in time, the sellers are more aggressive. Well, let's just go back a little bit before we get ahead of ourselves. To stop, it just means that the sellers are holding that offer. It means that buyers may well still be buying. You could have the massive amount of buyers, but if you've got one seller or a load of sellers sitting there soaking up those buyers, price is not going to move. For price to move, we have to have those sellers backing off and paying a higher price. The buyers can be super aggressive at that level, but if there's a big block of sellers, it's not going to move. That's why often we see big spikes in volume there, because buyers will still be buying thinking great, but it happens to be a big seller. Now, if that seller stays there and the buyers back off, they've bought all the inventory they want, they don't need any more to buy, there's nothing more for them to do, then we might then start to see other sellers stepping in, or we might see that specific seller stepping in lower. So two reasons, guys, why potentially resistance is going to hold. One is that buyers shut off at that point. They're like, hey, it's gone too far. I was happy to buy it at 49, 48, 47. I don't think it's worth more than 50. That's their, whatever reason they've got for that, whether, like I said, hedging or speculating, it's irrelevant. They might shut off. The other side of the coin is that sellers perceive that its value at 50, they're not prepared to sell it at 49, 48, so they've just been waiting. And that happens to be a level where they're decent enough and big enough to stop price. Now, this is why often we get kind of drifts through, because very rarely nowadays do we have just blocks sitting there. We used to have blocks just sitting on the order book and price might stop dead. Now you have algos that are kind of, you know, working a bit more aggressively, and they might get more aggressive the higher it goes above 50, because they're like, hey, we thought 50 was a bargain, it's now 51, 52, which is why often you get the stretch and comes back straight away, because buyers are run out of steam. Buyers are not that interested, and this is why you get these kind of sellers magically appearing. It's just a level they decide they want to buy it, whether it's one big seller, whether it's multiple sellers who have got a decent size, or whether it's multiple smaller sellers. It doesn't really matter. The point is they just perceive that to be a good level to sell at, and the majority is winning, and unless there's buyers to overcome them, that is going to hold very well and very strongly. Anyway, guys, that's what my perception anyway. At the end of the day, you know, everyone's got a different take on this. No one knows for sure exactly what's happening at resistance. It could be any number of those little things or a combination of all of them. But I think the way to think of it in our heads, the way I like to think of it, is like the supply and demand imbalance. All this supply demand imbalance shifts, where we get the equilibrium, where we get the kind of extensions for the momentum ignitions, where we get those price exhaustions, and understanding that, and just, we don't never know the answer fully, but if we can think a little bit ahead of the game and ahead of the other players, especially the retail traders, then we've got a good chance of understanding a little bit more about what happens when we get breakouts, whether it's a genuine breakout, what the flags mean, what the fake outs mean, and how to position to give us the best possible chance of getting a winning trade after a resistance or support level has been broken, or even just tagged. All right, guys, thanks for the question. Take care. See you next one. Bye-bye.